This is the Leadership in Insurance podcast, brought to you by FinPro Search Partners.
Insurance companies are businesses and they need to look for the long term and be sustainable.
We went from 0 to 1 and now it's going from 1 to 100.
Insurance as a concept, as a kind of service, is brilliant. The execution is what we're looking at now. I think the companies that are going to succeed are the ones that are going to understand and master the art of intent. When we talk about innovation, we lean too heavily to think about technology and we don't think about creating a culture of innovation.
I think innovation is essentially continuous improvement of existing processes and platforms and product.
Right? It's got to be easy. It's got to be seamless.
Hello and welcome to the Leadership in Insurance podcast. I'm your host, Alex Bond, and I'm very lucky today to be joined by a friend of mine from the Insurtech community, Max Drucker, CEO of Carpe Data. Max, how are you?
I'm great, thanks. It's wonderful to see you.
Yeah, likewise. And you've spruced up for us as well. You're making me feel very unshaven and not very well put together. So
I mean, it is a Friday morning, so I pulled it all the stops for you.
Yeah. You're making me look bad on my own podcast, but hopefully people are just listening and are watching. But look, Max, before we barrel into the conversation that we've got lined up, it'd be really good if you could introduce yourself and obviously the Carpe Data business.
Sure. I'm Max Drucker. I'm one of the co-founders and CEO of Carpe Data. We are a data company exclusive to insurers. We produce and build data products to enable drive automation for insurers, take steps out of the process, and improve insurance outcomes. Everything we do is with the idea of this is going to produce and drive an expected outcome, whether it's loss, whether it's fraud, whether it's retention, whether across the spectrum, and specifically really making sure that automation, which is an initiative really almost everywhere, is real and possible as we have a growing workforce, an aging workforce, as it is harder and harder to bring people on. Being able to have greater efficiencies through automation is a big deal, and data is the way of doing it.
Yeah, I mean, we were talking to Denise Garth of Majesco and various other people, and automation is the order of the day. And particularly, I'm glad you raised that issue of the kind of aging workforce, because I think there's been a lot of when we talk about AI and we talk about automation, and I'm not using them interchangeably. I'm aware that they're different things, but it's kind of all in the same kind of drive. Have you noticed that that it's been usually kind of met with a sense of panic about, they're coming for our jobs, but people aren't acknowledging the fact that we're losing people anyway. We don't need to worry about AI coming from our jobs. Our people are retiring and we're not filling that gap. Do you think that's sometimes a bit of an overlooked thing in the industry?
Yeah, absolutely. It is. And that's frankly why it's in my general talk track, is saying it's not about here's some technology so you can do a massive reduction in force here. It's we have an aging workforce. People don't necessarily have the skills, right? We always are trying to strive for more of a science than an art. And so we all want to grow, our insurers want to grow their business, whether it's across a claims population, whether it's an underwriting population, whatever that is, you want to grow your capacity. And now that we have a new generation of really powerful AI products, it's getting easier and easier. So to be able to provide the opportunity to not necessarily need to replace staff, be able to create greater consistency, being able to have greater operational efficiency from the lens I come from, via data products, it should be an exciting time, and it should be really kind of a no-brainer. The way we like to think about this is if you look at auto insurance, the quote bind issue process in auto insurance is effectively fully automated. And really what made that possible was the underlying data elements that could provide the insights, the information to enable the carrier to have the confidence to be able to issue that, to quote, and then issue that given policy. So because of the credit score, because of the motor vehicle report, because of the automated loss history report, the carrier could make those decisions and then make that get all the way through. So what I think we are going into a time of, and certainly the area that we come from and that we advocate, is taking these data elements across, whether that's small commercial or whether that's across a claims life cycle, and what are these steps that we historically used to have to use some sort of objective review or having a human being involved, and what are data elements that can enable us to have that kind of decisioning, and that data elements can be driven by this new generation of AI technology.
You were taking me back there. I started my career in motor insurance, and
There
I
you
was
go.
pretty bad. I was pretty bad at it, but it was 20 years ago, so I'll forgive myself.
And the data took your job. You see, the data took your job there, right? Because it
Yeah,
was the
well,
data
I
that
mean,
made that possible all the way through.
yeah, exactly. I mean, I worked on the claim side, and we used to do first notification of loss, and just the inefficiency of that is look, it's a long time ago, but you can see how far we've come in that. We would get first notification of loss, and 4 people would be doing it in the office and filling out paperwork, and the paperwork would get lost, and we're a long way from that, but there's still a load of road to go.
I was going to say that we were a long way from that, but we are a long way to go, right? On being able to, and it's interesting being in the lens of being a provider of technology. As I put in the broad category, we're specifically the data element of it, but technology broader for these use cases, because insurers largely do the same thing. Whether they sell automotive insurance or home or small commercial, and they largely are solving the same problems for customers, but the way they do it internally varies wildly, and the processes are different wildly, and the levels of automation at these various steps varies a lot from carrier to carrier, but there's so much inefficiency, so much opportunity.
Yeah, I couldn't agree more. It's interesting thinking about what I want to know is like, what carriers looking for from a technology partner now, and probably, like, from your perspective, what are they overlooking? Because you've got a really broad lens of the industry. It's like, what do they look for from you now as a technology provider, and what are they overlooking? I think is kind of an interesting point.
I'll certainly say in call it the 8 or 9 or 10 years that we call sort of Insurtech of the moment, a lot really has changed. And I think really in the era from 2015 to 2020, the ambition and the idea and effectively the initiatives driven by the top of the company were largely about innovation as a category, and carriers were really looking to innovate very broadly, whatever that meant, and that could mean across, whether it was in distribution, whether that's in underwriting, whether that's in claims, whatever that is. Let's look at new companies that are innovative. Let's innovate. Let's invest in these companies. Let's create innovation departments, and let's see what's out there. And let's see what happens. But several years have passed since kind of that moment, and it's not really what carriers are looking for anymore. They're looking for actual measurable results, and so it's very different, I think. And frankly, as a person that's been in the insurance technology space my entire career, it's actually a more tangible and more comfortable space for companies that just say, look, this is what our product does, this is what it costs, and this is the impact you should expect to see, right? And that's really the future, or I mean, really the world of what it being a technology vendor, a solution provider to insurance has been for decades and decades. Carriers have a problem. They're looking for a solution for it. The solution needs to make sense from the perspective of there's enough impact to my business that's worth the brain damage and the effort to actually do it. And the price point needs to, provide a meaningful return on investment. And that's where we are now. And it's taken a little bit of an evolution because, again, in this sort of wild early era of it, is like, okay, we'll invest, we'll experiment. This is what's good. We've taken some risk. Maybe it won't work. We'll see what happens. Now, there doesn't seem to be really much appetite for carriers that are looking out to spend time, take risks, see what happens. It's really about, okay, we have a BI severity problem. Okay, what are my options for doing that? what providers are saying they can do this. Okay, let's take a deeper look. Okay, now let's see what are ways of attacking that. Is looking at the entire social media presence of our entire injury claim population. Is that one approach we can do? Okay, how can we do that at scale? Can a provider do that at a price point that is going to provide a meaningful impact, right, and a meaningful ROI for us? That's the era that we're in now, and I think that we're going to expect to see that, forever. This is where we are now. It needs to be about a specific problem with a clear benefit and impact to the company, and clearly a measurable ROI.
And you're seeing that from the investment community. I mean, I've been specializing in Insurtech talent provision for nearly 5 years now, and what we were working on when we started, lots of distribution plays, lots of kind of brand new insurance entities. So we're saying, oh, we're going to reinvent the world of insurance, and actually, when you step back and said insurance is, there's an argument, it's a 300 or 200 year or even older industry, but it's an old industry and we've been doing it well for a long time. But there's inefficiencies, as we talked about at the start. So you're seeing the investable businesses now are saying, right, let's work with the existing businesses, let's make them more efficient, and let's be honest, let's drive profit that way. But the kind of way of selling it before was almost like you were selling a vision and a dream, and now we're selling cold hard facts. We're going, right, we can make you more efficient. We can, you can underwrite your throughputs quicker. You can automate the whole process. You can remove cost, and it delivers this value, and then I can charge X. And you're seeing that from the businesses that are getting kind of venture investment as well.
I think I was going to say, yeah. I mean, I think that's exactly right. And the shift in messaging, I think, for the companies that are seeing success now, is the product that you're doing is what they're asking for, is a solution. The product isn't innovation. The product isn't AI, right? The problem isn't a technology solution. It is a specific use case. It is, we look at the entire population of claims and identify fraud. That's the product, and that's what we talk about. It's not, our product is innovation. Our product is AI, and give us your data and we'll produce you some model. It's much more purpose-built. It's much more use case driven.
Yeah, I was thinking of actually, I was looking at my own small investment portfolio and just thinking the things I'm really attracted to are like discrete solutions, like that solve very specific problems. Selfishly, because I think they will all get bought up by bigger software providers, and I think that's the way I'll exit with my money. But the other thing is that, like, look, net new insurance products. Well, if you go into a net new market, we don't know how quickly, we don't know if you're too early, you don't know how big that market's going to be. And I'm thinking about all sorts of things like carbon and fertility. And these are all interesting, really interesting markets. But the timeline to deliver kind of value for you as an insurance carrier is much, much longer than having right, we solve this specific problem with a specific solution. So it's kind of much more exciting. And I do think if you look at the makeup of these new provisions and, businesses like yours that are solving very specific problems, there's more tenure in those teams. That people come from insurance or have been serving the insurance industry a long time. Have you noticed that the makeup of some of the kind of insurtech industry, the businesses, you're seeing people from the industry solving these problems rather than it was a lot of kind of, new entrants and probably making the wrong assumptions about insurance? And that's a huge sweeping generalization, but have you noticed the kind of makeup of the teams being slightly different these days?
Oh yeah, I think one of certainly the problems of the early days of Insurtech was the naivety of these providers and these assumptions that, oh, these are big insurance companies, they are legacy, they don't have talent. I went to Stanford and I got a degree and I know AI, and so now I'm the solution. I can solve the carriers' problems, without really understanding that in fact these carriers have literally hundreds of years of experience. They've been doing predictive analytics and building models and predicting outcomes for literally centuries. When we talk about things like mortality tables and weather patterns and whatever these things are, and not understanding that the challenges that many of these insurers face it's not a talent problem or a knowledge problem necessarily, but there are so many other issues, regulatory, inertia, optics, so many other things that make sort of, oh, AI should be able to predict a good price, right? And knowing anything about insurance, you understand, well, actually, sure, it's an interesting idea, but there's so much more to it than that. And so I think we saw a lot of companies with this, again, really naivety about the capabilities and experience, and being very presumptuous, going into insurance carrier and saying, okay, give us all your data, we'll build you some model for it, because we know how to build models better than you can, on my team of 10 people, right, versus your team of literally hundreds of data scientists, hundreds of actuaries, hundreds of data engineers. And so somehow a team of people in their 20s can, and somebody with a PhD is going to be building better models, right? And so I think there was a lot of that. I think that era has passed now. It's been, I think, a few years since that was really kind of the issue. And really now it is about buckling down and just, again, delivering very specific use cases for a specific problem that are very clearly measurable and frankly obvious, right? Being able to take 3 steps out of a small commercial underwriting process, right? Being able to select the worst risks and avoid them, being able to select the best risks and prioritize them or price them accordingly, right? This is obvious stuff that everybody can do, and providers need to be able to speak that language very directly and say, okay, for a claim population of this, we expect an impact of loss avoidance of $50 million, right? And the price point that we're all going to offer you to get that is this, and it's going to make sense. And just being able to, again, be very, very specific on what an expectation is, what the numbers are, and speaking the language of the carrier is really important.
Speaking that language is such an important thing. Yeah, I mean, I always count my blessings that I came from the industry and do the thing I do, because insurance people want you to speak their language, that's for sure. The one thing I wanted to ask you on top is about, we're talking about change and opportunities for change, new technology. We're talking about things that can make more efficient. We know those businesses are out there, businesses like yours are out there. But what are the main barriers to technology adoption in the insurance industry, and how do you go about helping carriers on that journey? Because obviously that's a prohibitor to you being successful, is kind of the speed of technology adoption.
I mean, I think it's really a story that's as old as time, right? It's fear of something bad happening, right? And therefore, carriers or the individuals, right, the people that have the agency and maybe people that feel that they have the most direct accountability, right, will take the safe approach, or the approach that's going to make them least likely to have an adverse outcome to themselves or to the company, right? And often that path of perceived least risk is just doing nothing. So people talk to us about what do we see out there? What are the trends that it's feeling right now in the industry or competition, et cetera? And the biggest, I say that the biggest threat we see, it's really about apathy, right? It's just easy to do nothing, right? If your business is running at 100 combined, right, things sort of be working. There's all these problems in it, however it goes, but you're not losing competitive advantage in one area. Things are sort of okay, but now somebody's asking them or looking to make an investment of a few $1 million, which is not just to whatever the provider would be, but to all the internal effort and all of the opportunity costs and all these other things that can happen. And if that doesn't work out, there's a lot of fear around that. And so, whereas in the early phases of the Insurtech area, that fear was sort of like, we understand things aren't going to work out, and so therefore you kind of have a safety net, or you sort of have, it's an insurance package, if you will, to experiment and things don't necessarily work. Right now, I think we're in an era, and I think again, this is where we are really in the future. There really isn't that. It's okay if things don't work out, because we're being aggressive and we're pushing hard and we're going to throw things at the wall and see what sticks. That's not the phase that we're in. So, what I think carriers are missing is it's just a sort of whiplash of, I was looking at everything over here now, and a lot of that didn't work out, so now I'm not going to really look at anything over here. And I think it's just important to say, look, there is good and there is bad, and it's important to evaluate solutions that actually, maybe they might be a newer, more interesting solution, but there still are really compelling, extremely low risk solutions based on newer technologies and newer approaches and newer companies, it can get you a great outcome, and that great outcome is going to create great things for you and for that company. But just missing that, it's right now it just feels like a lot of companies are taking a beat, are taking a breath, or are not taking those risks, and obviously, right, that cycle should and will change and needs to, because companies do need to take some risk, but at the end of the day, you can get a lot of benefit without taking a lot of risk, and I think that might be lost a little bit sometimes.
Yeah, I'm always struck by the challenge of, you're talking about regulated industries, you're talking about businesses that are built to, counter risk, right? So naturally risk averse. And then I do think there's something about, and you and I talked about entrepreneurial journeys in the past, in previous conversations, is like one of the challenges of publicly traded organizations. So if you're a publicly traded carrier, your incentives to risk your tenure as, let's say, CEO just aren't there. Like they're just not there. Like, why would you risk, Mr. and Mrs. Shareholder, by the way, we're going to invest a huge amount of money in potentially being more efficient and therefore driving profits. So we're going to implement these new technologies. So there is something in the culture of these businesses that is inherently difficult to make wholesale changes. But then I suppose to your point, that's why we're seeing this success of kind of single point solutions or like more discrete problem solving. And so, it's an evolution, not a revolution, and I think a couple of years ago, the Insurtech community was pushing revolution, and it's been resisted quite hard by the insurance industry.
But it's interesting. You talk about publicly traded companies, but on the other side, mutuals are very different. And we talk a lot about that too, because at mutuals, there can also be a challenge of incentives, right? Because everybody's here, thinks they're sort of, things are kind of working, and taking a bold step and taking a big risk for something that may have an adverse outcome, right? Seems to be a crazy idea, I think, for a lot of companies now. But I think though, hopefully where we are now is the companies that are still out there that are really pushing hard to carriers are those low risk solutions. So it's not really so much necessarily, hopefully, anymore about, wow, it's going to be a big investment, and there's some possibilities it's going to blow up in my face, right? But into your people, they're taking it in smaller chunks, and these are very specific things with very specific, very limited downside, but real potential upside. Let's tackle those one at a time, and I think that's again what we're going to see, over the coming years.
Yeah, and there's a natural progression of that, and something that I've talked about. I can't think of it. Someone will be sitting at home shouting at me, going, "That was me and you had that conversation, Alex," but I can't remember. But we were talking about that. No one knows better than the insurance carrier, the insurance broker that's been the incumbent. No one knows better than them, than the tech teams working there, how encumbered they are by their tech not being good enough. They know that, and there's always been this arrogant, like, "Oh, they don't know." It's like, no, they know they've got their problems.
They know. Right.
As the core system stack changes, and as it becomes kind of more kind of modern, and it's more plug and play, and other, you can plug these smaller elements in, naturally the platform is there for kind of evolution, whereas it just wasn't. You had these on-prem bespoke systems that didn't plug into anything, so you can't have progression there. Whereas now the landscape is, modern tech stacks, people can plug things in, people are building solutions that plug in. So we're just on that curve, and it just feels like we're accelerating down that pathway of the tech evolution, and it's natural. It's like we just didn't have the foundations for it, but the businesses are having those foundations being built for them.
It's interesting though. One of the trends that certainly I've seen over now, being in this space for more than 2 decades now, is that there becomes a swing of, there's the legacy system, and we want to replace that, right? And doing a wholesale swap of that, obviously has been a big challenge, but most carriers, or a lot of carriers, have been able to do that. But then they have maybe some new monolithic platform, or where it can be rigid. But to your point, now a lot has been able to been pushed to the cloud, right? And so now at least we're off of the on-prem, and we are in largely web-based solutions, and those web-based solutions now can tie in to external services, whether that's data, whether that's some functionality, whether it is, and that really creates a lot of new functionality. However,
Mm.
one of the trends we've also seen, and because it's sort of, okay, we have a platform, now we can plug things into it, we don't want to have a number of applications. We don't want to have different logins, different UIs, different tools, right? We want to have it be a service and plug it all into our platform. And so you see back and forth, the pendulum swings from, okay, well, that becomes really hard though, the sales are too long. Even though I have a new platform, it's still hard to plug stuff into it. So we'll use now a couple of other applications that we're then using. And then they say, okay, we're gonna get rid of those. We're gonna move back to there. Then we move back over there. So you see that pendulum swing back and forth between using purpose-built sort of like SaaS-like applications, right, to trying to build it all in and then back and forth. And so it's an interesting trend. And I think where we are now is kind of somewhere in the middle where carriers are, they have a lot of stuff, they want to plug stuff in, but they're, I think, more open to maybe where they even were five or 7 years ago. To then, okay, you know what? Well, actually, we can use this purpose-built tool to look up this or do this because it does enable us to solve an immediate problem now, and we don't have to wait.
Yeah, I had a conversation with someone the other day. We were talking about how, like, I think at one point tech was seen as this big differentiator, which is why everyone wanted to build their own tech stack. And it was, and actually, I kind of feel like the insurance industry's gone on a journey there to say, look, tech isn't going to be our differentiator. Let's buy the best off-the-shelf solution for us as the insurance industry. How we look at risk and how we consider our portfolio is actually how we might, differentiate ourselves. Which is probably interestingly where you guys in with data, how does like alternative data kind of feed into that? Like, it's an evolving need. There's an argument to say, why do they need data services? And which might be a naive question, but I think sometimes kind of it's not spelled out enough that why do they need this alternative data? I know I'm tossing you the ball there for you to pitch.
No.
I
It's a great question because I like to make this point. Data for the sake of data is meaningless, right? Data, right, is not the product, really, right? So we produce data products, but really, Carpe Data is a software company. We develop software to create data elements. Those data elements enable predictions on the carrier side, right? So we're producing something which is really some kind of ability for the carrier to make a decision. And so so what do you need alternative, whether it's alternative data, who cares what the data it comes from at some level, right? Is this data predictive? Is this data differentiating? Can people get this elsewhere? Is it something I don't have, right? And what's it going to do for me? Because can it either help me automate something or can it predict an outcome? And specifically, we have a data set that we've built of every business in the US. It's what we call Minerva for small commercial. And we can tell you what the business does from the online presence. We're looking at its websites, we're looking at the various socials, whatever these things are. We know what the business does. We know what the specific risks are, but also we can tell you how the business compares business A versus business B. And so we can tell you that a business with, we have our own loss propensity scores, we have our Carpe risk scores, we have customer rating scores based on a carrier's level of sophistication, how much they want to plug these inputs into their models to then determine, I think that there's going to be a loss within this business is twice as likely to have a loss within 12 months as that business. And then I can automate decisioning around that. So why alternative data? Alternative data is not relevant necessarily only if the data is unique and predictive to drive some sort of an insurance outcome, which it absolutely is. And while I think intuitively you might say, oh, okay, I guess it kind of makes sense that a business, a restaurant with terrible Yelp scores, might have better outcomes than a restaurant with super terrific Yelp scores. That might seem intuitive, and it is, and it actually, that by itself is not, it's not enough data. It's not predictive enough, and there's not enough coverage in that. But if you can take sort of understanding these areas and these drivers and put them into something that's actionable, and so take all of this data together and create that record for Joe's Cafe, right? And we use a Joe's Cafe in Santa Barbara. There's 26 Joe's Cafe in California alone. So how do I know I have the right Joe's Cafe? And how I know it's the right risk elements are in there? How can I be able to make sure this Joe Cafe be predictive so I can put that into an automated model that I can apply to every single quote that comes in? That's where alternative data and having a company like us that really refines this massive amount of structured, unstructured, all of this data, throws out all the noise to be able to do something that then can drive that outcome, whether that's loss, whether that's fraud, whether that's again automation. That's the benefit of data that they're not currently exploiting today.
Hmm. Yeah, it's that actionable insight, isn't it? It's like the data for the sake of data. I mean, you know, another misconception I think was always people going, "Oh, insurance companies are bad with data," and I was like, it was almost for me like a laughable
Yeah, right.
concept.
It's
It's like,
wrong,
do
right?
you know?
Yeah.
I was going, do you know what actuarial science is? Like they have a science just for this industry, and they're really good with data. And obviously, what we're talking about enriching. Like how do we enrich what we do? How do
Well,
we make it better?
so let me just stop you right there, though, on that. So I completely agree that insurance carriers are really good at data, specifically the structured data sets when they have it in a format and they know the outcomes that they're trying to achieve. But what they're not good at, which really no massive older companies are good at, is getting all the data together and cleaned and normalized and prepped in a way to really do something with that and drive intelligence from that. I mean, that's a very hard problem, but no insurers, but like so many other companies, they do have that problem, and they have looked outside to bring consultants in. They look to have vendors and do that. They do these initiatives internally. They're great, whether that's that data lake or try and get all the data in some sort of consistent way, put it out in the cloud. So then the data experts can then do something with it. So I think there's those components out there.
Yeah, it's the classic bad in, bad out, right? So if
Right.
if your data's not right, you're not there. Max, we're at time, and I feel like we've barely started. But so I'm
I
disappointed.
agree.
And I knew this would be the case. But one thing I did want to finish off, and sort of you've been in the business, the data business a long time. What's kind of a newer challenge or a newer demand from your customers? How has that kind of need evolved? Because obviously you're selling different kind of solutions to probably how you started, or an evolutionary solution. What's kind of a new sort of maybe a new challenge or trend that you're seeing from the customer base that's come out today?
Um, I just think the appetite for friction and brain damage
Mm,
and doing hard things is much lower.
right.
So a more simple solution, for example, one of our products, we find fraud across injury claim populations. So it's very easy. Carrier gives us all of their open injury claims. We do a effectively very efficient, low cost search of the entire claim population. We identify those areas that are not consistent with the claim. We identify where that fraud is. We then monitor those claimants for that fraud. We generate that effectively evidence of what that is. And then if the carrier needs to know more, we can provide them more information on it. But it's a really simple product. And
Mm,
just having something that's a real no-brainer, it's really simple, and say, look, can you find this much fraud? You have this much benefit. It's really easy to measure. It's really easy to justify and really easy to implement. So basically, being able to have as low a friction, as low a risk, as obvious products, that's what they're looking for right now. They're not looking for, hey, we have some AI solution and we can do anything for you. What do you need? What are your problems? Okay, give us all
yeah.
your data. Let's put a model. Let's put the UI. How do you want to do this? Let's workshop this. Let's do this. Carriers don't want to do any of that, right? What do you
Right.
have off the shelf? What's really simple? Okay, let's go. That's the appetite that I think we're really seeing. Much less ambition and figuring it out and doing hard stuff, which is great, and that's fine.
Yeah, it's funny. So I'm reminded of I saw a survey yesterday, which was 84% of senior leaders interviewed, and I think it was just insurance specific, but I don't want to. It might be financial services, so I want to be clear on that. It was 84% of senior leaders had said that was they had a negative experience of inviting in the big consultancies, and it just reminded me of that. It's like turning up without a specific solution, whereas you turn up and say, right, we've got this solved for this problem. Does that benefit you? Off we go.
It's what they want. It's what they want,
They
right?
don't want to sit and workshop. No one ever does. Max, it's a pleasure. I've been looking forward to this for a long time. We've known each other a couple of years now, and I wanted to get you on the podcast. So thank you so much for finding some time, particularly on a Friday morning. Yeah, thank you very much for being a guest on the podcast.
You got it. Really a lot of fun. Thanks, Alex.
Thank you.